2 sleeps later, and I'm still disappointed in the federal budget. We had a deal. 50% of our capital gains in a corporation would only 50% would be taxable. Now the federal budget changes that with only 10 weeks notice. They don't grandfather any of the properties we've already bought. Something much more reasonable would be, give us at least 6 months notice, and anything bought after X date should be included in this new tax regime. But no. And those who say that we're complaining too much as investors, again, we had a deal. Now someone's changed the terms of the deal, and it'll cost people it could be 5-6 figures in extra tax dollars. So would anyone be happy about having to give up $10, $50, $100,000 more to the government just because of a date that was arbitrarily chosen? I literally have clients who sold properties like 2 months ago with the closing in July, and this budget comes out. What do you think my client feels? Hello and welcome, investors. This is the Truth About Real Estate Investing show, and it's never about sunshine and rainbows. On the positive, my clients are very successful. My name is Erwin Cito. I'm a top 20 real estate influencer in Canada, host of this Tell It Like It Is podcast, ranked as high as 81 on Apple iTunes in the business category globally. My team and I have transacted on over $440 million of income properties in and around Hamilton, St. Catharines, Kitchener, Waterloo, Cambridge, Brantford, etc., and that's translated into over 45 self-made real estate investor millionaires that I call my clients and my friends. This is all done in Ontario, where it's harder than ever, and the new budget makes me sick to my stomach. Sadly, I had a feeling this tax grab was coming, since our Liberal government loves to spend, and go into more and more debt. There's even more debt, and we're going to match the deficit apparently. So the deficit isn't going down with the new budget. Someone was going to pay the piper, which played into my decision to start selling off my portfolio. The decision was made late last year. Thankfully, those houses closed in May. Thankfully, we strategically chose good properties. The slowest it took between 7 to 32 days to sell my properties. So that just tells you how strong the market is, and that we chose properties that had a strong market for. So we got a little bit lucky. And I have one other house that's going vacant at the end of this month. I told those tenants back in December I was planning on selling. We do need to renovate, as the tenants were there for 9 years, but the scope will have to be minimal for a quick turnaround in order so I can stage it, get photos done, and then list it. I'll set my asking price below market and hold offers, and I'll be letting people know my preferred close date is before June 25th, 2024. Wonder why. Federal, provincial, municipal governments, you've asked for it, and I'll continue to educate, give my full effort to educating working middle class Canadians all day and night that we don't have to be subjected to your onerous policies. And I'm going to tell them the truth. For example, TerraNet, which is a private company, they came out with the Global Mail came out with an article just a few weeks ago. Let me get you the exact number, because I don't like being wrong. I can't find it anyways, but it's something like 27%, 27.3%, I think it is, of all properties out there are owned by investors, and that includes cottage owners. So for the federal government to say there's only 40,000 people that are affected by this new budget, by this new capital gains increase in inclusion, that seems like a bold-faced lie. And I cannot stand being lied to, which is why I created this podcast and called it The Truth About Real Estate Investing. Yeah. And again, I mentioned all levels of government are coming after us. In case you missed it, in 2022, just 2 years ago, the Ontario Provincial Liberal and the Ontario Liberal government, the Liberal Party said they'd get rid of Doug Ford's November 2018 rent control exemption on new construction. The NDP promised, Andrea Horwath, the leader at the time, promised to go a step further, promising, quote, full rent control. None of this changing the rent on a vacant unit, end quote. Again, that's from former NDP leader Andrea Horwath, the honorable current mayor of Hamilton, Ontario. I've got a link in the show notes to the National Post article. So I find that I mention it because even though it's from 2022, I still hear many people say, oh, my property doesn't fall under rent control because it was built after 2018. Well, unfortunately, Doug Ford will not be our premier forever. And we know where the other leading parties are standing on the topic of rent control. Needless to say, we're going to make real estate investing great again for my clients and family. I already have about a dozen clients already working on or already owning, they already own property in the States. I'll continue to share my journey to divest our Canadian investments to diversify, reduce risk, improve cash flow where there is no rent control in landlord-friendly USA. Our current target markets are Atlanta, Georgia, Savannah, Georgia, and Dallas and Austin, Texas. Ownership, these are very boring choices. They're all among, like Atlanta and Dallas are the number one and number two choice among REITs. So folks who own like tens of thousands of houses, those are the top two choices. So I'm not reinventing the wheel here. Ownership structure wise, with the new updated budget, with the new capital gains inclusion rate, it's looking like Cherry and I will own our US company. The company that owns our properties will be owning them personally together. And that way we can at least maintain our 250,000 capital gains inclusion at the 50% rate for each of us. So we each will get a 250 allowance essentially, and then load up on liability insurance. I don't have all the details yet, but this is the plan that we're working with right now. Thank goodness mortgages in the USA are commercial style. So they're DSCR, which stands for debt service coverage ratio. So my personal credit does not matter for acquiring properties in the States. It's all about the quality of the deal, and I can find those all day with Share's help. Not advice, just sharing what I'm doing. Please seek professional advice, especially the accounting advice. I'm not an accountant. On to this week's show. My friend Shawn Bedard, who I first met at REIN, the Real Estate Investment Network, over 10 years ago, and our real estate investing paths are quite different. Back in 2010, Shawn couldn't find any deals that made sense to him in Ontario, and he took a piece of advice that he heard at REIN to go look at the States. So he did. He took action on that information. He went to Landlord Friendly USA and bought 4 houses in Atlanta and 10 in Memphis, Georgia. His experience in investment went... I'll let him share. Other than real estate investing, I invited Shawn on the show to discuss his volunteer work at the nonprofit organization called Entrepreneurs Organization, or EO for short. Specifically, the Accelerator program, where Shawn has been leading the initiative to guide entrepreneurs with $250,000 to just under $1 million in revenue in US dollars to get over that $1 million mark in order to become a full member of Entrepreneurs Organization, like him and I both are. I've been a member for 4 years. Shawn's been a member for, I think, like 10. And it's been an invaluable resource for entrepreneurs like Shawn and I. Hence, I love it. Hence, I joined the board for our Toronto chapter. What I love about EO members is that they're kind, successful people who all want to make their mark in the world, make the world a better place, especially. And of course, my favorite subject, make money. Our values are trust and respect, thirst for learning, think big, be bold. We innovate, take risks, and see opportunity in a challenge. Can you see any risk challenges that are going on right now for Ontario landlords? Together we grow. We are committed to each other's growth and well-being. I've got links to, for anyone who wants to learn more about the EO's Accelerator program, eocanada.com/accelerator. Again, links are in the show notes, which are on my website, truthaboutrealestateinvesting.ca. And also for anyone who gets my email list, you'll have all the show notes in your email. To connect with Shawn, he's on LinkedIn, and his website is jigtechnologies.com. Again, links are in the show notes. Shawn and I also talk about, I'm a frugal person, so being part of EO is actually very inexpensive. I think for me, it's about $7,000 a year, which compared to a coaching program quoted me $10,000 just to be a member and not receive coaching. So that's kind of the difference between for-profit versus nonprofit. And again, I love value. I love return on my investment, and EO is a wonderful return on my investment. We also talk about Shawn's path in education as well. For example, Shawn took a commercial real estate course at U of T. We can't track it down, so if anyone can find it for me, I'd love to hear about it. But there's options out there, folks, for high quality real estate education, even from a university, that are really inexpensive. And to be honest, a lot of the people who are in financial trouble right now, folks who are going bankrupt or who who took on these promissory notes, who lent on them, if they'd just done some more research and education, I think a lot of them could have avoided these problems. So please enjoy the show. And yes, it's not all sunshine and rainbows, but there's a lot of successful people out there. My portfolio's done quite well. Shawn's portfolio's done quite well. Just sift through the crap, bare your teeth through these tough times, and get through it. All right, please enjoy the show. Yeah, for the listeners' benefit, Shawn and I are both we're both part of the Entrepreneurs Organization Toronto Chapter Board. And we're going to the leadership conference in Singapore in April.
Yeah,
so depending on when this gets released, I may be back already.
Very good.
And Shawn, we've known either. So we first met in what, like 2010, 2008?
Yeah, probably more like 2010 at REIN.
Right.
Yeah.
So we met each other at the Real Estate Investment Network, and then what year did you stop going to REIN?
Probably end of 2013. So I was there from maybe 2010, 11 to the end of 2013.
And then I ran into you again about 2020.
Yeah, when did you join EO? I think I ran into Cherry first.
What?
She was an accelerator for a year.
I referred her too.
Yeah. Okay. Were you in EO before she joined Accelerator?
Yes, I was.
You were hidden then.
It was a pandemic.
Yeah.
We were all hidden.
We were all hidden.
So, Shawn, so I met you at the Real Estate Investment Network. Where were you investing at the time?
So at the time, I'd started looking in Ontario and was trying to find commercial real estate for my business. But after looking for maybe a couple of years and deciding that the cap rates in Toronto were just not where I wanted them to be, I started looking elsewhere. I ended up in the US because the cap rates were 3 and 4 times more and the prices of properties were a lot less. And the landlord rules were just so much better that I ended up taking my real estate knowledge and investing down there in the US.
So did you take all this real estate education to learn commercial for your own office?
Yeah, originally
you invested a lot in your education.
Yeah, well, it was interesting, right? I found it an interesting topic, and I like learning about investments and real estate being one of them. So I started taking a course at University of Toronto to learn about how to evaluate properties in the commercial real estate market. Took that, thought it was a good course, and kind of got hooked. So I started looking for a real estate kind of group and network of people to learn from, and that's how I ended up in REIN, and that's how I really ended up in the U.S. because one of the speakers there talked about investing in the U.S. and what the market was like, and that kind of sort of led me in that direction after doing some investigation.
Super cool. I'm actually releasing I just interviewed Patrick Francie for this podcast. I'm releasing it this week.
Oh, neat.
He's the current CEO of REIN.
Yeah.
Do you remember who the speaker was? Who was talking about the States?
I don't even remember. I think it might have been it was an older gentleman who did financial advice. I don't remember his
Good
name.
advice.
Yeah, he had a very deep voice, and he was older. I don't know if you can pick him out from that, but
he wasn't a lawyer, was he?
Yeah, I think he might have been a lawyer. Now that I think about it.
Is it Franklin? Was his last name?
Oh, yeah, Franklin might have been him. That sounds about right. And he just mentioned about if you are investing in the U.S., here's the rules to think about, and different ways to structure it, that kind of stuff.
I think was it David Franklin?
Sounds right. long time ago.
Did he?
And they always
Did he?
and they always had
Actually,
the personal beliefs, right? Which kind of got me in. Oh, I don't have to invest in Canada. I can look elsewhere. Yeah, it's him.
okay. For the listeners' benefit, I found an article with David Franklin. So that was Richard Dolan's lawyer. That's how we got introduced to David. And
Oh,
David's in the news a lot because he's going after a lot of these syndicated mortgages that went bad, like Fortress. So
oh,
big
neat.
class action lawsuits representing investors.
Oh, wow.
Yeah, I must have
Yeah,
missed that part of his talk.
well, it was sort of quick. Like it wasn't the highlight, but he was talking about structures. Like he was
Mhm.
talking about S corps and stuff like that in the U.S. and structures.
Right, right. And
And
then
so
what did you end up investing in the States?
um, so I ended up in Memphis and Atlanta in single family homes. And I came across those two locations. There was actually a radio broadcast. It's called the Real Estate Radio Guys or Radio Real Estate Guys. But basically, these two guys that are on a podcast, they talk about real estate investing, and um, they talked about Memphis and how it was a great kind of income investment.
Hmm.
So you're not going to get big highs and lows in terms of appreciation, but it's kind of a very steady, high cap rate, um, kind of low risk market because of that.
Hmm.
And then for the appreciation piece, I was looking at Atlanta because it was kind of a growing city at the time. Looked like there's a lot of promise in that city for growth and appreciation. So that's why I ended up in Atlanta for that piece.
Funny enough, I
Um,
plan on investing in both those cities myself.
Very good.
And how's the experience been?
It's been quite good. Like any real estate investing, as everybody knows, it doesn't always go exactly as planned, and furnaces break and things happen that you don't expect. But you know, as long as you're kind of ready for that stuff and know you're going to need the odd cash call and then bring it up again, then it's been quite good. Um, I'm much happier that I've invested down there than up in Canada because I've heard some of the kind of landlord tenant nightmares that people have had. And where in the U.S., if someone doesn't pay rent and for for a few days, like 4 days later after they haven't paid rent, you can start your eviction process, right? And they're out in a month, whereas you could never do that in Ontario. Um, so abusive tenants have not been an issue down there.
Hmm.
There's been tenants that had started to maybe get in that zone, but they're very easy to get out quickly. Um, so it's been good. The bad experiences that happened were kind of you kind of knew you were in for, but they didn't last a long time. You could address them quickly.
Hmm.
It was good.
And then how many did you buy in each city?
So I got 7 in Memphis and 2 in Atlanta.
Start of the year?
Between 2011 and 2013 was when I was buying them.
Those were good times to buy because the dollar was near par.
Yeah, so it was a great time because the dollar was near par, and they were literally selling houses for below construction value at the time too, because you just come off that 2008 crash. Um, so you could get a house for below construction cost, and you get the land for free. And so even though Memphis is not a great appreciation market, yeah, I've done okay on the appreciation front in that side. So I sold a couple just recently, and and they had run for about 9 years, and they were both sort of doubled what I purchased them at, plus the extra 30% on exchange from the dollar too, right? So it did pretty well.
And then how did you manage them from afar?
Um, so the one thing about the U.S. is the property managers in the U.S. take care of everything. Um, so they collect the rent. They pay the repair people to do repairs. They manage the repair people, and they just send me a report at the end of the month. So it's really good. I do ask them if there's an expense over $300 that they contact me, so I can approve it. But they really just take care of everything. It's great. Um, I do have a couple of properties in Alberta as well, and I found the property management not to be as all inclusive because things like the hydro bill and the gas bill, those get sent to me. Whereas in the U.S., they take care of all the utilities, right? So they just manage all that stuff and just let me know what the final sum is at the end. So it's for passive investment, it's been pretty good with the property managers.
Right. So your American properties are single family, so they're all plus utilities, but your Alberta properties are not?
So the Alberta utilities are plus utilities to the tenant, but the utility bills literally arrive in my mailbox. So that the property manager doesn't handle the utility bills. I do.
Why don't the tenants put them in their name?
That's just the way the property manager says to do it. So maybe I got the wrong property manager in Alberta.
Which city in Alberta?
It's St. Albert, just
Okay.
outside of Edmonton.
Interesting. I mean, I wonder if this is a function of the market because in softer markets, for example, I was speaking to another investor in Fort Erie. He had to do inclusive utilities just because the market was soft. I just wonder if it's a symptom of a softer market.
It could be. It's sort of been that way for a while, right? So I bought those places in 2014, and I've just kind of followed the lead of the property manager, and that's just always the way they did it. But I'm always up for new and improved ideas.
And how's your Alberta investments performed?
Uh, not they've been okay. Not as well as the ones in the U.S. Um, but they definitely have carried, which has been good. I haven't had any cash calls, which is also good. But they haven't appreciated as much because I bought maybe when things were going down a little bit, and they went down and they started to come back up, but yeah, it hasn't quite come back. Alberta hasn't quite come back to the days of the 2010s when gas and oil were really booming.
Hmm.
So they've never quite come back to that heyday again.
And how many houses do you own out in St. Albert?
Just a couple, just two.
Yeah, it's unfortunate. Like a lot of people that we knew, they went to Alberta, and they would have been much better off if they just stayed in Ontario.
Yeah, although the laws out there, like the landlord laws, are more landlord friendly.
Yeah.
So that was partly why I ended out there, is just because um, it seemed like it would be less hassle from the tenant management point of view.
Hmm. What I'm finding with my research in the States is that the property managers are just so much bigger in the States. Like for example,
Yeah.
the cities that you mentioned, like Atlanta, Greater Atlanta is like 6.1 million population, so there's enough economy. The city's big enough to support large property managers.
Hmm.
And Memphis's population is 600,000. So like
Yeah, and you
people
can
need to
get
remember like these are small. Like Alberta is not that big.
yeah.
The city of Atlanta is bigger than the province of Alberta.
Well, I guess the other thing is, like, one of my property managers is literally a national property manager. Like, their name
Hmm.
is Cry Lake, and they do property management all over the U.S. Right? So they're enormous, right? Um,
How do you
and
spell
then
that?
uh, Creyleke, sort of an unusual spelling.
Okay, it is an interesting spelling.
Yeah,
Cryeleke.
Yeah, CRYE. Yeah.
And they're,
LET.
well, yeah, they cover a lot of markets.
Yeah.
And they manage for all your properties in the States?
Not all of them,
Okay.
but they maybe about 50%.
Okay. No, because I ask because I see Memphis and Atlanta on markets that they cover.
Yeah, they get a good.
And this just proves my point. Like, this doesn't exist in Canada where you have national coverage on a
No,
large scale.
yeah, I don't think I've seen that. But with a big company comes sort of big company bureaucracy too, right?
Uh-huh.
So they have their processes and they like to follow them. And if you want outside of it, it they do it their way,
Mm-hmm.
right? So like if you want like say a different kind of reporting in their reports, they have their reports and
Mm-hmm.
you get what you get kind of thing.
Mm-hmm.
But it is what it is, right? It's a report that's been tried, tested, and true, and they run it on thousands of clients. So usually it's pretty decent, but you got to follow their process too.
Well, hey,
But,
they're not charging you utilities, so
yeah,
they're
they're
not
not.
coming to you. So I'll take that.
Yeah, no, they take care of it all, right? They just run it through and manage it all.
Oh, and I just want to go back for the listeners' benefit. The U of T course that you mentioned, we were talking about it before we were recording. You said it was a 1 semester length.
Yeah, so it was a one semester, something like 12 or 15 weeks, and every week there was called a 3-hour class, kind of after works sort of thing. And each class would kind of go into the next sort of set of detail on kind of the fundamentals of real estate analysis. So how do you analyze a property? What are all the different ratios? What are the things you need to think about when purchasing? Area and type of tenant and all that kind of stuff. And it was more focused on commercial, kind of analyzing commercial properties, but they did talk a little bit about residential as well.
And do you remember how much you paid for that course?
It's like 300 to 400. Like it wasn't a huge fee. It was what you'd pay for any typical university course as a
Well, it's gone
one-off.
up a lot now, but yeah, no,
Yeah.
that's not bad at all. So this was a university credited course, was it?
Yeah, I don't know. I don't know if I got a credit out of it. Like I
Right.
probably did, but I
That wasn't
wasn't
what you're
going
going
through it.
after. I'm just out of
Yeah.
curiosity.
Yeah, I don't. Yeah, I don't actually know. I just know it was through the continuing education department.
Mm-hmm.
I remember, but I probably got a credit. But like I said, I wasn't going for a degree or anything. So
So for listeners' benefit, Shawn and I were trying to find it online, and we haven't had any
yeah,
luck. So if anyone finds it, if you could send it in to us, because that's incredible value. Like, sorry, you'd
yeah.
recommend it to others?
Oh yeah, absolutely. Like if you want to know kind of the fundamentals of analyzing properties, it was as good of anything from what I've been through. So for sure.
Right, and
If you
very affordable.
Yeah, very affordable. If you want like an entertainment course, because some courses are entertaining, it's probably not for you. It is sort of dry, and you get this big heavy textbook you got to go through. But if you're just seeking the knowledge, it's quite good.
Right. I find making money exciting. So
Yeah, if, if you're driven by making the money and you enjoy learning, then you'll have no issue trying to get through it. But it's academic, right? Like
right.
it's like REIN. I found when I went to the Real Estate Investment Network, they put on a show, like it was almost education entertainment.
Mm-hmm.
This is really just it's a
It's an
course, and you
academic
go.
course.
Yeah, it's
Yeah.
an academic course you go through.
That's okay. I'm not willing to not have the show to pay $300.
Yeah, 100%.
Because REIN in by today's value compared to today's prices for courses and coaching and whatnot, like REIN, we were paying $200 plus tax a month,
Yeah,
and that
a
was
month,
it.
pretty good. That was decent value too, right? And it was more than say the university course, but you got you kind of got a network out of it as well, which you didn't really get out of the university course as much.
Right. That's how you and I met.
Indeed.
And that's kind of like the point of this episode, and having you on as well, is to talk about inexpensive education. And yeah, so can you tell us a bit about your, give us a bit about your journey? Like, I have your bio. You used to work for many household name companies. They're in your bio, so I can name them, right?
Yep, 100%.
Right. So you just worked for CIBC, Sun Life, and IBM. So everybody knows those names.
Yeah.
Yet that wasn't good enough. You had to start your own company.
Yeah. Well, I guess so. I was, I'm sort of been a nerd through and through. It's sort of in my DNA. Yeah, I went to Waterloo for computer engineering. So, the natural thing to do after that is to work for kind of these companies in their tech departments. So, worked for Sun Life, building a lot of the ATM network for those bank machines that you know and love. Worked in IBM for the client solutions department. So basically developing server and client solutions for their clients. And then I started to work for kind of smaller boutique firms. The big companies are great for kind of learning and getting a base, but I wanted to make more of a difference. And so instead of being a small cog in a big wheel, I became a small cog in a smaller wheel, which made me a bigger cog. So I started working for more consulting type firms. Basically a software development firm that got acquired by a big management firm in the US, and that ended up ending my career there for a bit because I didn't want to work for a big firm. So I moved on to another small firm for a logistics firm that kind of figured out, hey, I got 43 cars and 93 stops. How do I optimize the cars for the routes and mapping it on a map? To starting my own thing. So I just started from big and going smaller and smaller and smaller to be able to make a bigger difference in the company until I start my own thing. So that was kind of my path. It's always been in technology. How does real estate come into play? Well, after starting my own business, I started accumulating some wealth because I didn't need to kind of spend all the cash that came in from the business. And I thought I'd get a building to put some of that wealth into for the business. And that plan just didn't seem to make sense looking at the numbers in Toronto at the time. It's kind of like 2010 and 11, and cap rates were kind of the 2 and 3% in the city.
Good Lord. And that was a good year to buy too.
Yeah.
That would have been right after the financial crisis.
But the cap rates are still really low. It's like you'd pay $2 million for a building and make very little in rent.
Right. Yeah, because commercial real estate was incredibly resilient during the financial crisis.
So I was like, this just doesn't seem right to me, right? Like so I started looking in Hamilton, and the cap rates were a lot better out there at the time, but it was a project, right? So anything in Hamilton was to get the real value out of it. You got a project to work on, right? Because you're either forcing equity by improving a building or changing the way the building works. And I just, with a business full time, I was like, I don't have time for a project. And it seemed attractive, but not for me at that time. And that's how I got kind of into the US, which is, I wanted the better cap rates. And I knew they were possible, but that's like I said, that's how I ended up in the US.
Do you remember what area of Hamilton you were looking at?
I remember one building pretty clearly. It was right on Barton Street.
Oh,
and
man.
It was this, basically buy it for $10 and you got a 30-unit building to fix up, right? But it had because that area was starting to gentrify, and over the 10 to 15 year period, you could kind of see the vision of how that would be a really good investment if you had the time to kind of invest and improve the building.
And the tolerance for the grief. Yeah.
Yeah. And a tolerance to get through it. But like I said, it would have been a project, and I just didn't have the capacity to
Right.
take on a project like that.
Right. Because you don't live in Hamilton, you have a wife and kids.
Yeah, I don't live in Hamilton. I have a wife and kids. I got a business, and I was looking for more passive, which which is what I found in the States.
And did you get better cap rates too with single family in the States than you would have in Hamilton?
Yeah. So
Gee.
yeah, because I was getting 12 to 14% cap rates in the single family home in the U.S. at
Yeah.
that time.
Yeah.
Just because there was a big crash that occurred, right? So
Yeah.
you
Yeah.
had a house that would cost $250,000 to build, you could buy for 125, 150, and you could get your $1,500 to $1,700 a month rent on that place. So it was just right place, right time,
Right.
kind of situation.
Sorry, those numbers. Sorry, can you take me through like a Memphis or an Atlanta example? What were you paying back then?
So yeah, like you could get a house for like a 4 or 5 bedroom house for
That's a big house.
$150,000. Yeah, for 150 grand, right?
Sorry, what city was that?
Memphis,
Okay.
Memphis for sure.
You got okay. And what's it worth today?
So they're more. So I sold one recently, and we sold it for like that $150,000 house.
Yeah.
We sold it for 310 or something like that.
And what was the rent back then?
Back then it was about 1,500, and then now it's
God, 1% rule.
yeah. So you can usually even get a little bit higher. Sometimes you get 1,650 out of it too. So, and then fast forward 10 years, and now they're 2,100 for the same place. So rent hasn't quite doubled, like the property value, but
That's pretty much consistent everywhere, though. Rent doesn't really seem to keep up as much as prices.
No. But the mortgage has become less, right? And even though interest rates have gone up, the rent has gone up commensurately. So they're still cash flowing just fine, even with higher percentages on mortgage. And some of them aren't fixed, so the U.S. will offer a 25-year fixed. So I did get one property on that, thinking I was stupid at the time because it was so much more than the other interest rates. But now I'm laughing, right? Because everything has gone up higher than that now, and it was cash flowing at the time, and now it's cash flowing better because the rent has gone up.
Well, the magic of not having rent control.
Indeed.
How happy are your decision not investing in Ontario? Oh, I should mention, like you live in where do you live in the GTA?
So St. Clair, Mount Pleasant. So,
right. So Midtown.
Yeah, Midtown.
Yeah. So Shawn lives Midtown Toronto, doesn't invest here.
I looked for a while, and it was just like the idea of buying $1 million home and getting 2,500 or 3,000 rent just drove me bonkers, right?
Mm-hmm.
Just how are you going to cash flow with that? And I'm sure it can be done, and I know that there's people that do it successfully. I never solved that nut myself.
Going forward, though, I don't know how many people these days want long-term tenants because with rent control, it's a big risk.
Yeah.
Like you live in Toronto, so your property, you have your property tax. Like we're all homeowners, our insurance is all going up.
Yeah.
Like, I weep for. I have some properties where utilities are inclusive, and I weep when I see my bills.
Yeah, it can be tougher. And some people have figured it out, but I never, like, I couldn't make the economics and the risks of it make sense for me.
Mm-hmm.
Because he said taxes go up, other stuff goes up, but it's very difficult to increase rent or evict if people aren't paying rent in Ontario.
Yeah, so you can understand why I'm pivoting. I wish you told me this stuff back then.
we're in the same room. It could have happened. We just didn't have the right conversation.
Damn it. All right. And then you still like these markets? I'm selfishly asking because I'm looking at buying in Memphis and Atlanta. Actually,
Yeah,
let me give you an example. So I had a client just close on a property, Memphis, Tennessee, 1,100 square foot detached bungalow. Uh, paid 95,000 for the house.
yeah,
They're going to spend that one. I think is 120. Sorry, that one's going to be 25,000 in renovations, and the rent will be 1,100 plus utilities. Just for the listeners' benefit to look at to
yeah.
hear about like what I'm looking at and what my clients are buying. I actually just had a client this week go firm on a similar property, 90,000 to buy, $13,000 renovation, same rent though, 1,100.
Yeah, I guess one of the things to be watchful of in Memphis is they have this sort of line where if you go below it, it's kind of like the Detroit scenario, right? You get these properties that get really hard with lots of client turnover and lots of client abuse.
Mm.
So knowing the neighborhoods in Memphis is important, just like any other investing, right? So
Mm-hmm.
when I was down there, I was trying to stay out of the lower class neighborhoods and go
Mm-hmm. Mm-hmm.
more the mid class. So the, and if I was in lower class, I would have demanded a higher cap rate than if I was in the kind of the middle class neighborhoods.
Mm-hmm. Mm-hmm.
So just going on the numbers alone, it's hard to kind of say, hey, is that a good thing or a bad thing?
Yeah, yeah.
So if you mentioned neighborhood, I'd maybe give you a, hey, that's good, bad, or ugly, right?
Right, right, right.
Um,
Yeah, it seems in general, like, just even my own observation is that nobody really lives downtown. No one should. I don't. I think that's generally that's what the crime is in the most urban areas.
yeah, but there's other suburban neighborhoods that are just like they're known as the kind of rougher neighborhoods,
Mm-hmm. Mm-hmm.
like just like anywhere else, right? So you can go to like so Bartlett's kind of in that middle class neighborhood, right? So Bartlett's kind of like in the middle class, and if you want, you can go up to Collierville, which is kind of a little bit upper middle. And so I've gotten better appreciation in the upper middle class neighborhoods,
Mm-hmm.
but had kind of pretty decent cap rates there as well.
Got it. Got it. Yeah, I'm looking
Um,
at more North Memphis. You're a bit northeast.
yeah, so it's been a while. I can't rattle off the neighborhoods off the top of my head, but if I can, if given a bit of self study, I can get myself back into the game again and kind of get my head back into it. But yeah,
Yeah, we can
like
talk about this more offline. Just to,
yeah.
have you refinanced any of these properties, or were you buying these all cash?
So they were all financed. A couple of them I've refinanced privately, like so I've basically used holding company money to refinance it, and then the holding company holds the mortgage.
Sorry, is it your
So
holding company?
yeah,
Oh, cool. This is
yeah,
creative. I like this.
yeah. So the idea is my tenant is paying my holding company's interest. Technically, I am, but the idea is it comes back into the holding company. Um, the thing about money in the holding companies, it can get in there from my business without tax, right? So operating company has excess cash, it goes into the holding company before paying any tax. You can then leverage the money in there for other stuff as long as you don't have a personal benefit, right? So that's kind of the idea.
This is super cool.
Yeah.
Yeah, I wonder if this is just the because it's very common to do 3-tier strategy for corporations. My wife does it. I'll probably have to replay this to her and have her explain it to me.
And it's there's other ways to do this, and I probably shouldn't. Like I have too much in one holding company. I know I need to separate my assets and liabilities at some point. I haven't quite done that yet, but at some point I probably need to.
Super cool. That's fantastic. Okay, so we still need to talk about EOA. You're okay for time, Shawn?
For sure.
All right.
Absolutely.
So part of the reason I wanted to invite you on the show is I've referred a couple people to Entrepreneurs Organization. So I belong to Entrepreneurs Organization, Toronto chapter, like yourself. I've really enjoyed it. I've been part of it for over 4 years now. I've referred quite a few friends, including my wife and the other people you know, like Melissa Dupuis and Sarah Copeland, who have been past guests of the show. I've referred a whole bunch of other people as well. I was referred by Quentin D'Souza, who's like a complete real estate dynamo. You remember Quentin
Yeah.
too, right? And one of the reasons I really like EO is it's very affordable. I forget. I think we're paying like 7,000-8,000 American a year.
Yeah. Round numbers. Like there is an initiation fee for the new members that want to join, but again, it's in the few thousand range as well.
But the value's been fantastic. Like so many things are included with that. Like there's so much education and dining and drink, and I take too much advantage of the drink sometimes.
Oh yeah. But it is what it is, as you mentioned, right? You could probably get a bunch of drinks cheaper if you just bought the drinks directly. But
that's not the reason to join.
But really you get a couple of things, right? You get a network of people who are kind of in that same sort of tier, right? So they do have at the EO level, it's kind of the 1.3 million Canadian or 1 million US kind of hurdle to get past. So you know that people have kind of gotten above that level to be in the group. So you get a network of peers that own businesses and founded those businesses that are kind of running through similar kinds of challenges as you, trying to grow your business and grow yourself personally. And then being in that network of people, you learn from each other, right? Because everybody who's in that group has some amount of success, so they know a little bit what they're doing, but nobody knows everything, so you can learn a lot from your peer group. And I think you're on a forum as well, so you meet monthly with that group. So it's an awesome way to kind of really kind of get your business to the next level and use peers to get there. And so that's the one piece of it. And the other piece of it is there's all kinds of learning, as you mentioned, both nationally and in the country and as well as internationally, because they have learning events all over the world, whether it be in MIT, they used to
Harvard, NCED, London School of Business,
Science,
Harvard.
all that stuff. So there's all kinds of learning opportunities in your organization as well. So it's really good.
The Global Leadership Conference in Singapore that you and I are attending, partly subsidized by our membership.
100%, right? So we got to play for the plane trip, but that event is, paid for a lot by our membership fees. So those people who are not going, they're paying for it too. So we get to use the other people who aren't doing this stuff, their fees too.
I'm a poor real estate investor. I'm flying on points.
There you go. Awesome. So that's, like I said, there's lots of ways to do this stuff. That's sort of the EO level, and I think you wanted to talk about Accelerator as well.
Yes, because most of my listeners will be not that scale of $1 million US revenue.
Yeah.
But the funny thing is, like, if you flip 2 homes, for example, you flip 1 Toronto home, you qualify because your revenue is the price of the property you sold.
But I guess for, like, say you're a property manager, for instance,
which know a couple. I introduced you to them.
tough to get to that level in the first year or two, but there's an accelerator program, and the sole purpose of that program is to get people of similar mindsets, the growth mindset, together to grow your business, and it really focuses on growing your business. So again, there is kind of a bottom line to that, which is at $325K a year. So you're making over
Canadian,
Canadian. If you're making over $325,000 a year, and you want to grow your business. That's important too. Mentality. This is a good group to join. And their fees are, much less than EO, right? So it's more like $4,000, $4,500 a year to join that group.
Sorry, is that Canadian?
Canadian, yeah.
Yeah. So and so that's
taxes.
less than 500 a month.
Yeah. Yeah.
Yeah. So what I always tell my friends is like I told Melissa Dupuis and the Sarah Copelands, I said like especially if you haven't done business school, like EOA is incredible. Even if you have done business school, I think one should go join EOA. And one of
Yeah.
the things I like about EO and EOA, again, EO is short for Entrepreneurs Organization. EOA is Entrepreneurs Organization Accelerator. It's way cheaper than a lot of these programs that are out there. And also, Entrepreneurs Organization is an enormous elder program
Yeah.
organization, and it's nonprofit, so you know it's cheaper.
Yeah. And it is a very subsidized environment because a lot of the value that comes in to EO is from its members volunteering their time.
Mm-hmm. Including yourself
So,
for 5
you might
years.
have, yeah, indeed.
5 years been doing this.
Indeed.
So you lead the EOA, the Accelerator program. You've been leading it for 5 years.
So I've been leading it for 2, but maybe I'll talk about the program a bit more and I'll give you the context
Please,
of
yeah.
how it works, right? So if you're a member of this Accelerator group, you have 4 learning days per year, and those are full day events, right? So a full day of learning is included, as well as you get an accountability group that's like your forum that you meet with monthly for 3 to 4 hours. So this accountability group will have 4 to 5 members, kind of that similar revenue level, as well as a coach to kind of coach the group along and help conduct the meeting. Coach isn't the boss, right? It's your guys' group. You guys own it and help drive the agenda, but they're there to provide best practices and all that kind of stuff. And the coach is a volunteer from EO. So there's someone that has that business of, 3 to 4 million or 10 million, kind of in that range.
Mm-hmm.
And
like
then
yourself.
they're there, like myself, to kind of help there and coach these groups along and help them. Okay, yeah, I've been there. I know about that. Here's my experience to share as well, in those monthly meetings with your group. So you're not paying cash for that coach. That coach is volunteering their time. So that $500 a month you're paying, the value you're getting out of it is way more than $500 because you're both getting the experience from those peers as well as that coach in that group. So if you were to go to kind of pay for the coach on a paid basis, like these are like $5,000 and $6,000 a month type engagements, right? So if you were to go to Gazelle's business coaching or Gino Wickman's Traction, they offer these as well. It's coaching as well, but you're paying $5,000 or $6,000 a month for that kind of service. Whereas this, because it's a volunteer basis and you're expected to contribute as well, it's a much cheaper bill, of course. But
yeah, and I'm cheap. So.
Yeah, but you're also expected to contribute, right? That's the deal. You're there, you're a member, you contribute as well as much as you take.
Mm-hmm.
So that's the deal with these groups. And you get your learning days, you learn a bunch of stuff, and then you get your accountability groups to kind of do that check-in. Because when the learning day, you learn a bunch of stuff, you write down your goals at the end of the day, and then you present those goals to your group. And then every month you're checking in and telling them how you're going to do. So it gives you a bit of it's not just a learning group and it's not just an accountability group. It's kind of got the best of both worlds in the Accelerator group. So it's, it's a good group. That's why I give into it. I really believe in it. I've coached as well, and I've had my original 5 that I got, like I've coached about 15. So my quest is to get everybody in that original 5. I graduated to over $1 million, and I got 3 down and 2 to go. So.
And when Cherry was in your group?
Cherry was not in my group.
Oh, okay.
She graduated all by herself without my help. It was a different coach, of course.
Cherry already qualified for EO. It's just she didn't want to commit to full EO right off the bat. That's why she started with the EOA.
And as far as I know, she seemed to enjoy it at the time. She got, even though she had a bigger business, and there's a lot of larger businesses that join Accelerator, they do get a lot of value out of it because, just that sharing of ideas with other entrepreneurs really helps anybody.
And for anyone who thinks $500 is expensive, try booking a venue in Toronto
Yeah,
and having
maybe.
these events catered. The money disappears quickly.
Yeah, for sure. And yeah, or just take a look at those, like where you pay for a coach, right?
Mhm.
Of this caliber, right? Because we get a professionally trained gazelles coach in every quarter, and you get the coaches from EO as well, right? So try and price that out, see what it costs. It's more than the $500 a month for sure.
And they're getting you. So you've built a multi-million-dollar business from scratch.
Yeah.
Fair? And can you share how many employees you have now?
So in Canada, there's about 19, and we got a Filipino contingent that's about 15. So we're not huge, like we're not IBM, but about 35 employees. So it's more than the guy and his dog.
And can you share some challenges that you've had? Like you must have had some significant, like you've gone through, like first of all, you started in 2003, which I'm surprised. Like you
Yeah.
started right after the tech bubble burst.
Yeah, it was sort of there was a bit of a culling, and as I tell people, I started working for smaller and smaller companies until I started my own. Um, the I started just doing contracts, right? So contract work, um, and hiring, eventually starting to hire people because my corporation was initially just a consultant, me working out of my bedroom doing software development. And then, hey, another contract comes in, another contract comes in, and hiring people. Um, and so there's been a sort of a few dips along the way. Um, one dip was when we first started trying to hire offshore. And so we couldn't find people locally, and we hired a bunch of people offshore. And what happened was, our service dipped, because, they didn't quite work and think and invest themselves the same way as some of the onshore people did. And it's hard with an offshore team, right? Because you're not sort of in the same room with them all the time.
Mhm.
And we had to sort of figure out the right place for that onshore expertise and put them in the right roles and the right positions. But what happened was, with that initial kind of onslaught of, hey, people are not getting the right answers, they're getting upset, we're not solving their problems quickly enough. So we lost a handful of clients at the time. And so we had to really kind of re-engage and figure out, how are we going to make sure we leverage the advantages of offshore without reducing our service quality of the onshore people, and figuring that right balance. Um, so in hindsight, it was a bit of a mistake to just kind of jump right in 2 feet in and hire a whole bunch of them. We probably would have um, figured out the right positions for them and the right roles before just kind of jumping in really quickly. So, lesson learned, mistake made, and on you go. Um, and yeah, I don't know. Easy to say in hindsight, but hard to say, kind of going into it, because like, hey, cheap labor. They have all these credentials. It shows on paper, but kind of mechanically seeing how they work is kind of a different ball game for sure.
So what changed? How does you have almost 20 people overseas still out of office.
So I was figuring out what they could do and what they couldn't do. So what they can do is anything that's sort of patterned and rote. And if you can put it in a manual, they can do it. If it's things you can't put in a manual, like, hey, we needed to figure out the right solution for a particular situation, that's where they struggled. So when we threw them into kind of the more, I wouldn't say problem solving, but the things that were not by the book kind of solutions, that's where they struggled, right? Because they didn't quite know what the client wanted. They give a wrong solution because the client would say A and they would offer them solution B instead. So anywhere where you need that strong kind of creative thinking out of the box and really understanding where the client's coming from, because they're not going to be able to speak in your language, they speak in their language. So doing that interpretation from business speak to tech speak, that's where they struggled. But reset the passwords or email's not working or, those kind of things that you can do play by play in a book, they're awesome at, right? Like they're lower cost, they're faster, they're more effective, they're more efficient, kind of that stuff. And so, once we kind of got them in the right place, that's where it really started to come together and we can kind of pull together the right solutions for the right people.
What year did you join Entrepreneurs Organization?
So I joined around the time I stopped the REIN. So 2014.
10 years.
Yeah, 2014, 10 years ago.
And if you could do it all again, when would you join EOA and EO?
20 years ago, about a couple of years after I started my business, if I knew, because I was able to kind of, so I'm a problem solver. I can solve problems, no problem. But I joined Accelerator at the time, similarly, because I wanted to kind of try it out. And what I learned was, what are the right questions to be asking, right? Because I started my business as an engineer that did software development. And on the side, I had this business, and I had to flip it around to a business owner that was managing a business that delivered technology services. And that was a big kind of mindset change. And like the EO teachings kind of helped me flip from the practitioners in a business to the business owner running a business. And it's you can't really explain it without sort of experiencing the whole program, but it's that flip of mindset that it gave me, which was really good. And it allowed me to ask the right questions, which I was asking the wrong questions before I joined EO.
Interesting. So what are some of the right questions that people should be asking?
Should I be doing this? Right? So as a business owner,
what should I stop doing? What should I start doing?
Yeah. And so, like, as the engineer, I was like, of course I should be programming these things. I'm the senior engineer in the group. And then so when you get an EO, it kind of like, are you the business owner or are you the engineer, right? So it's, okay, if you want to be the business owner, think long and hard about what you should and shouldn't be doing, right? And so it kind of became pretty clear I should not be writing a line of code at all if I want to grow a business, because you can't do both, right? There's only so many things you do. You got to focus in on, what's your business's core values? How do you want to position yourself in the market? What's your sales process? What are the threats in the market, right? Like all that business strategy stuff, right? And as an engineer, you didn't even think to ask those questions. Think about my market risk. Why would I do that? I'm busy programming this program for this client, right? So it kind of gets you out of that in the business, on the business mentality.
Amazing. Shawn, we're running out of time. Where can people find out more information on the Accelerator program?
So short answer is type in EO Accelerator into Google and it'll come up. I wonder if we can share links to people.
Just send me the link later.
Provide some links that we put in the description of the podcast. That might be the easiest.
Yeah, it's not the easiest to explain. It's eonetwork.org/EO-accelerator. I'll have the link in the show notes, folks.
Yeah, I think that's the easiest.
And like I said, I've referred several friends, including my wife. Again, we don't get anything for recommending it. This is a nonprofit.
Yeah, there's no kickbacks, unfortunately.
Yeah, like I just want people to get good value. You know what I mean, and get good quality information. And I was very happy to see my friend Sarah Copeland graduate. I can't wait to see Melissa Dupuis graduate into the full program. And is Mike public information? He's a generic enough name that I can say that.
Yeah. Just Mike. There's lots of Mikes in the world. Yeah.
Well, I can't wait. Well, this comes out later, so I can't wait. I can't wait to have my lunch with Mike and congratulate him for graduating from EOA.
Yeah, very good.
And yeah, you must be incredibly proud.
Yeah, it's sort of like all coaches' dreams is to see their players grow and excel, right? So it's awesome to see. That's part of the reason why you do it, right? It's a good give back to watch people that are struggling kind of figure out how the game works, and then move to the next level.
Mhm.
Awesome to see that.
Yeah. And then I'll also say, like I've mentioned on the show before, like I find entrepreneurs organization people very kind.
Yeah.
I actually find they're less capitalist than real estate investors.
Well, but it's also part of, as we described there earlier, right? So if you're joining this organization, you're expected to give as well as receive, right? So
Yeah,
if that's not the way you operate, then don't bother, right? Like
yeah,
it's that's the way it works. And
yeah.
if you're into that, come on aboard. If not, that's okay too. Everybody
Mhm.
has their own their own way of working for sure.
And to be very vulnerable.
Yeah, true enough.
I always remember when
Yeah,
the accountant, the sponsor accountant from one of the big firms, was sitting at our table for a dine around, and hearing the way we talk about hockey, his
yeah,
eyes just went enormous, right? Because he's a corporate guy. He's like, I can't believe you guys are talking about this in front of me.
yeah. The EO forums, they go deep. Accelerator is a little bit lighter. They don't go as personally deep, but they go deep into your business.
That was one of the reasons I suggested to Cherry to go to the full membership.
Yeah,
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 to deeper and also bigger players.
yeah, 100%.
Mhm. Shawn, thanks so much for doing this.
Oh,
We
thank you
we
for
need
the
to chat
invite.
more about Memphis and Atlanta investing because I'm going there myself.
Very good. Yeah, if you want a couple property manager names, feel free. I can pass them along. And the property managers know the rest, right? The real estate agents, the lawyers, all that stuff.
Fabulous. And then, do you want to share your name of your company in case anyone needs some managed services?
Sure. The plug at the end. So if anybody needs managed services, like managing your servers and networks, or software development, the name of the company is Jig Technologies, and we'll put that in the show note links as well.
Yeah, JIG Technologies Inc.
Yeah, you got it. So yeah, we do IT strategy, managing your servers and networks and desktops, and integration, software development, and websites. And that's our stick.
Fabulous. Again, thank you, Shawn, for doing this.
You're welcome. Thank you kindly. Have a very good rest of your evening.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.